In this video, I will be revealing my entire share portfolio, which has now snowballed to over £300,000. I have a fairly ordinary job in the education sector, but I've been growing my portfolio for 13 years now by simply investing spare money each month into large established companies, mainly in the FTSE 100. Many of these companies are global giants earning much of their revenue from around the world. I prefer large established companies which pay reliable dividends simply because I find this highly motivating, seeing those monthly dividend payments flowing in. I always reinvest the dividends and allow them to compound over time. There are so many different ways to invest, but I like to keep things simple and consistent. This is not financial advice, I'm just showing you what I choose to do. Please do your own research. For my investing platform, I use Barclays Smart Investor, and they offer a stocks and shares ISA to protect your investments from tax. I've been investing for over a decade, and I'm as excited now as I was at the start. My portfolio has survived the economic downturn, the Dubai debt crisis, the European debt crisis, the 2010 flash crash, market corrections of 2011, 15 and 16, various elections, Brexit, and a global pandemic. I invest regularly, regardless of what happens in the markets. Okay, let's buckle up. This is going to be a long one. The defence and aerospace sector makes up 2.1% of my entire portfolio. Only one company represents this sector, and it's BAE Systems. The shares are up 11% over the last year, and they have a yield of 4.5%, and they pay out twice a year. Next is the banking sector, which makes up 11.8% of my portfolio. I have 4 companies. The first is Barclays. Yep, I buy Barclays shares using my Barclays Smart Investor platform. They were the first share I ever bought in the portfolio. The price is up 30% over the last year, and they pay out dividends twice a year, and the yield is 3.2%. HSBC climbed 18% last year. The dividend yield is 4.5% and they pay out 4 times a year. The Lloyds share price increased 37% last year. They pay a very reasonable dividend yield of 4% and the payout frequency is twice yearly. IG Holdings has not done so well. Last year they fell 8%. They had initially benefited from the rise in share dealing during lockdown, but more recently demand for their services has decreased. They pay a high dividend yield of 5.3% and the payout frequency is twice yearly. In the chemical sector, I have just one company, Croda International, which makes up about 1.5% of the portfolio. The price of Croda shares rose 52% over the last year, but they have pulled back recently and I've been buying more. They pay out dividends twice a year and the yield is 1%. Over the last 5 years, the Croda share price has increased 200%. The consumer goods sector makes up 14.8% of the portfolio, and firstly we have the maker of Guinness and other famous brands. The company is Diageo, and it's one of those companies with a large economic moat, and new entrants to the market would find it very difficult to compete. I've been buying more Diageo recently and will continue to do so. It's one of my favourites at the moment. Its price increased 37% last year. It pays dividends twice a year and the yield is 1.8%. The second company in the consumer goods sector is Unilever, which produce so many of the brands we use every day. Unilever have had a difficult time last year because of lockdown, supply issues and staff shortages. The price is down 12%. They pay dividends 4 times a year and the yield is 3.7%. This is another company that I'm buying at the moment as I see the recent price fall as a bargain. I really do have faith in this company, and over the last 5 years the share price is up 20%. The food and tobacco sector makes up 8.2% of the portfolio. The British American tobacco share price has hardly changed during 2021. This company pays 4 times a year and the yield is nearly 8%. Imperial Brands is up 4%. They also pay quarterly and a dividend yield is 8.6%. Tate & Lyle make food ingredients and is one of my most recent companies which I only started investing in about a year ago. The share price has fallen slightly in 2021. They pay out twice a year and the yield is 4.7%. Now for the insurance sector, and I have two companies which make up a total of just over 4.3% of the portfolio. Firstly is Aviva, which is up 26%. It pays a dividend twice a year and the yield is 5.4%. Direct Line Group has had a rather rocky year and is down 14%. It pays twice a year and has a high dividend yield of 8.2%. The metals and mining sector makes up just 2.6% of the portfolio, and I have just one company, Rio Tinto. It pays a huge dividend of 10.2%, but the share price has suffered lately and is down 12% on the year. The dividend is paid out in two instalments. The oil and gas sector makes up the largest part of my portfolio at 15.4%. This is because when oil prices fell in recent years, I saw this as a buying opportunity, and now this sector has been coming back strongly. When the world gets back on its feet again, I might consider scaling back or rebalancing the portfolio, as I don't want one sector to dominate too much. Shell is my biggest holding in the entire portfolio and is up 25% last year. It pays 4 times a year and the yield is 4%. BP is up 30% on the year. It also pays out quarterly and the yield is 4.7%. The pharmaceutical sector makes up 13.2%, and I have two companies which I've held for several years. AstraZeneca is up 17% in the last year. They pay a biannual dividend and the yield is 2.4%. GSK had a slow start to last year, but as you can see from the graph, they have done a lot better more recently and finished the year up 17%. They pay a quarterly dividend and the yield is 5%. In the renewable energy sector, I own three companies which make up 4.3% of the portfolio. The first is Bluefield Solar Income Fund. They specialise mainly in solar power, but they are starting to branch out into other forms of renewable energy. The share price has fallen 5% last year, but they have done well over recent years. They pay dividends quarterly and the yield is 6.5%. Greencoat Wind concentrates solely on wind energy and the share price is up 5% over the year. They pay out 5% in dividends and the payout frequency is quarterly. The Renewable Infrastructure Group have both wind and solar assets. They are up 5% on the year and pay a 5% dividend. The payouts are quarterly. The retail sector makes up 3% of the portfolio and I have just one company. Tesco shares are down slightly on the year. They pay dividends twice a year and their yield is 3.5%. They have had some tough times over recent years, but I think they have changed the direction of the business and are now on the way up. The utility sector makes up 11.2% and I have three companies. National Grid are up 20% over the last year. They pay out twice a year and the dividend is 4.6%. SSE are up 7%. They also pay twice yearly and the yield is 4.9%. United Utilities, which supply water to our homes, are up 19% and the payout is twice a year. The yield is 4%. And now for the ETFs, which I'll treat separately even though there is going to be a bit of overlap with some of the sectors I've already mentioned. ETFs make up 7.5% of the portfolio. I started this portfolio in 2009, long before ETFs were a popular asset, but I'm adding more and more as time goes by. If I was new to investing today, I'd definitely start with buying the two ETFs I'm about to mention. The first one is a single share but gives you exposure to the 100 largest UK listed companies. Here are a few of them that you would own. The name of this one is the iShares FTSE 100 ETF. It's up 11% last year. Dividends are paid quarterly and the yield is 3.7%. The other ETF I have does a similar thing but gives me exposure to 500 of the largest companies in the US. It's called the iShares S&P 500 ETF. And you can see from this list the largest companies that you would own. This ETF went up 30% last year. It pays out 4 times a year and the yield is quite low at 1%, but you do own all of those big American giants. over the last 5 years this ETF is up over 91%. So now for the totals in my Barclays Smart Investor account, and I hope you stick around to the end because there's going to be a little twist to the story. At the end of the year, the portfolio was just over £300,000. The average dividend yield is 4% and the total return on investment over the last year is 20%. So this means if you invested £1,000 in my portfolio at the start of 2021 and sold everything at the end of 2021, you would end up with £1,200. But what about 2022? How have things changed in the first 2 weeks of the new year? Well, it's been quite dramatic. And despite no buys or any new money going into the portfolio this January, it has risen to £314,000. It's been a great start to the year so far. Please give this video a like if you found it useful and would like future updates. Click up here to see how my investing story began. Click down here to see the lessons I've learned along the way. Let me know how you're getting on with your own portfolios in the comments box, and thanks for watching.